David, we spent some time earlier this year in Washington, D.C., and now we're here in Singapore on this part of the world. How are you?
Great to be here. Great to see you. You're not struggling at all from the jet lag all the way from that side of the pond.
19 hours.
Yeah.
Made it.
Congratulations. I was complaining about the jet lag from London, so you're doing better than me.
Well, great. Well, so here's the deal. You're the CEO. The CEO sits at the helm. You are the captain of the ship. You're driving it forward. And in your seat, in this space right now, how is LMAX Group doing? How's the health of the organization? What's the strategy? What's on your dashboard?
Wow. I've got a board meeting next week, so I guess this is good preparation for that. So I think, look, first and foremost, if you don't know about LMAX, we operate 5 exchanges globally. Most of those are in foreign exchange. We trade about $30 billion a day. The 5th exchange we launched was actually in Singapore, SG1. We did that last year. We've had a hub, an Asian Pacific hub in Singapore since 2015. Of interest probably is that we're one of the TradFi status quo that moved into the digital asset space 6 years ago. So we launched LMAX Digital, which is one of our 5 exchanges in 2018. We're probably the biggest institutional crypto exchange out there today. Only one venue trades more Bitcoin than us every day. They have about 50 million more customers than us. We don't trade with retail. We only trade with institutions. We've got, across the group, we've got 35 of the world's largest banks trading with us and all the proprietary trading firms in the world. I'd say in terms of part of your question there, how's the group doing? How's the industry doing? It's kind of a COVID bounce back. I mean, there's been a triple threat post-COVID. You've had rates, you've had recession, you've had the Russian invasion. So it's been a challenge. And in the midst of all of that, within the crypto, the most nascent of our asset classes, you've had a lot of bad actor behavior that came to the fore in the last 18 months. So that market's showing resiliency, but it's still way off the highs. So look, the reason I love capital markets, I guess I've been in it, you can probably tell by my hair, I've been in it for 30 years. It's been one of the more challenging times, but we really believe in both asset classes. Foreign exchange is the biggest asset class in the world, trades $7 trillion a day, and we believe that crypto is the proof of concept for the way all capital markets is going to trade in the decades to come. So we think we're well placed there for the overall tokenization and, most importantly, democratization of capital markets. Did I answer most of your questions?
You did. I'm happy
So
that you. Well, we're not done. We're going to get to more crypto and digital assets, but I want to stick with FX
Sure.
in the Asia market. I want to hear more about your strategy for Asia, the opportunity here, where you see FX growth, and also in terms of just what's next here in Asia for LMAX. What more do you plan on doing?
Yeah, so Asia's obviously a very important territory for anyone in foreign exchange, and particularly for LMAX Group. Asia Pacific accounts for around 20 to 25% of the total foreign exchange market. Now, the number one hub is London. Long may that continue. Who knows, post-Brexit. And then it's followed by New York, and then it's followed by Asia Pacific. And Singapore is rapidly becoming the new hub for Asia Pacific. It makes sense that Singapore becomes the hub. I'd say there's still a battle going on between Singapore and Tokyo, but for lots of reasons, the initiative led by the MAS in Singapore means that this could really become the Asia-Pacific hub for foreign exchange. Now, the issue with Asian customers and foreign exchange in general in Asia-Pacific is where risk desks reside. Historically, they've always been in London and New York. So if you like, Asia-Pacific customers have always been disadvantaged. With this MAS initiative, you see risk desks moving to Singapore, which means you can not just have sort of sales and distribution here, you now have trade matching and risk transfer happening in the region, which is better for the customers and, of course, better for the region overall. So, look, we saw this coming. Things never happen as quickly as you think. So we set up our operational hub in 2015. We set up our exchange matching in 2022. I believe we have the risk desks here already. We have all of the liquidity providers available in Singapore. We just need a few more customers to move their, if you like, their pricing engine and their models from London, New York, and Tokyo to Singapore, and then I think you're going to see this jurisdiction really thrive. And I think if I look across the Asia Pacific, it's probably the most forward-thinking regulator you see across all asset classes, and certainly within foreign exchange and crypto.
Good, good. So with LMAX Digital, just not too long ago, LMAX Digital turned 5 years old.
Yeah.
So when you look at 5 years, you reflect back on that time, and what does the next 5 years look like based upon what you went through in the first 5 years? How are you going to approach the next 5 years?
5 years feels like 55 years. I mean, that's what they say in crypto, right? So every month is like 12 months in any other asset class. Look, it really is hard to predict because there's a few things holding that asset class back. The primary one is the lack of a regulatory framework anywhere. Just anywhere. I mean, I'm based in the United Kingdom. We're a very well-regulated group. I've been regulated as a multilateral trading facility and a broker since 2010. We've got regulations all over the globe. We've got 2 pending in Singapore. We only established LMAX Digital to service the institutional market. The banks are coming, the banks are coming. Well, the banks are still coming, but they haven't come yet. And the reason is they can't. It's the same as the asset managers entering the space. So I think predicting the next 5 years is tough. What I would say is on a longer time horizon, you're going to see that the backbone of capital markets is going to be blockchain-led. So the biggest issues we've had in my 30 years in capital markets is settlement, payment, and reconciliation. Blockchain technology can solve a lot of that. I mean, if you think of almost instantaneous transfer of beneficial ownership and efficiency of collateral, that is going to enhance all of capital markets. But it means that the traditional assets we're used to trading need to be tokenized, digitized, and harness that blockchain backend. So it might be, where does tokenization start and where does crypto end? My personal belief is that Bitcoin, which is now quite old, 15 years old now, is just the proof of concept for the tokenization of everything. So what we spend a lot of time thinking about at LMAX Digital is what's next. How will you be able to trade a digitized US Treasury, a digitized Apple stock, or a ETF, right? Or a gold token, or a silver token, or an oil token. So we just kind of think that everything we list today within LMAX Group, I think we list about 130 different products. We expect all of those to be tokenized within the next decade. So that's what I think's going to happen for LMAX Digital. And I think over time, I have 3 brands. I have LMAX Exchange, which is my FX brand. I have LMAX Global, which is my market access brokerage brand. And then I have LMAX Digital on its own, which only trades crypto today. I think what you'll see is that digital and exchange will move together, perhaps even become one brand, because people want to trade Bitcoin dollar or oil Bitcoin or tokenized dollar versus Apple stock or US Treasury on one exchange. I mean, it's a little known point, but in 2021, which is the height of the sort of crypto boom, BTC USD was our 8th biggest currency pair, right? So I just treat Bitcoin the way I treat Eurodollar. So Eurodollar is always number 1. And out of that 130 products, Bitcoin was the 8th. So I just expect that crypto and blockchain will pervade all of capital markets. That's what I want LMAX Digital to be, and I want to make sure that we can do it within a well-regulated framework. So for that to happen, to avoid the ills of the last couple of years, you need to have separation of function and segregation of funds, right? So if you look at the way LMAX Digital is structured today, I have separate regulation for a broker, separate regulation for an exchange, and in crypto, there will be separate regulation for custodians. So we need that separation, we need that segregation, and then I think the whole LMAX Digital, and more importantly, the tokenization of the economy and capital markets will fly.
Okay, so LMAX Digital is 5 years old. Bitcoin is 15 years old. We're talking about maturity. And one thing about institutional adoption is it can signal whether the market's mature by those more institutional players coming into and jumping into the water. There's a lot of institutions that have their toe in the water. They haven't jumped all the way in the pool. What is it going to take to get them there?
Well, I think go back to the start. I mean, look, I think let's look at the near term. So I can talk about regulatory frameworks and I can talk about credit intermediation and greater adoption, but a big catalyst we should be looking at in the next 6 months is the approval of the ETFs. It's my view that that's inevitable, right? There are hoops to jump through. Of course there are. I think we need to look, probably January is one of the dates we need to look at. That's when ARC 21, the SEC has to respond to that ETF. And then I think the BlackRock date is somewhere in March. But my expectation is that will be approved because all the respective regulatory boxes have been ticked. Now, what happens then is it just provides wider market access to that core product. So at the moment, because of the lack of regulation, because of the fact you have to trade the spot, which banks, for example, don't have approval to trade today, the ETF all of a sudden, the whole of the asset manager segment and the banking segment will have access to this new asset class. So I think that's going to be the closest catalyst we're going to have. If I'm honest, I think the regulatory frameworks will take another 12 to 18 months to work out. So we shouldn't be waiting around assuming that the US is going to have this perfect crypto framework within this year or even next. And likewise in Asia Pacific, they're doing it sort of step by step. The MAS came up with a stablecoin framework last week, which is a useful starting point. But then we need to have brokerage regulation, exchange regulation at the same time. So longer term, we're going to have those frameworks established globally. Europe is also behind the curve. So it's not like Asia Pacific, the US, or Europe are actually leading the pack. They're all about the same, and they're all taking time. But regulation needs to last for a long time. Securities laws in the US have been around for 90 years. So they have to be able to accommodate for all eventualities. But back to where I started, I think the real catalyst will be this ETF approval, which, in my view, is inevitable.
Yeah, and Franklin Templeton jumped in, BlackRock, Grayscale, so all of that, we're keeping our eyes on that. I want to kind of maybe dig into you a little bit more, because I think that when you're talking about leaders in the space, there's two camps that kind of line up. There's the traditional finance, I'm TradFi or I'm DeFi, and some people are all in on crypto, and some are kind of total skeptics. In terms of your leap, you spent time in traditional finance. You're now here, kind of building in this new future of finance. How did you make the leap? What things did you see that made you say, "Okay, I'm in. I see this is happening"?
I think if you have a long career in capital markets, you have to constantly evolve. I mean, if you think about it, when I started in the middle office of a bank that I guess no longer exists, Credit Suisse, way back in the 90s, and back then all trading was done on the phone, right? I was one of the guys that had to go and pick up a trade ticket. So you hear about people talking about the cost of a ticket of trading. The youngsters don't really understand what a ticket is, but the reality was a trade ticket had 4 sheets of paper in different colors. One went to the back, one went to operations, one went to finance, one went to credit. So what was interesting for me in the 90s was suddenly we got into this electronification, right? I was sending risk reports out globally by fax, right? Again, people don't understand what a fax is these days. So we moved into like direct dealer input, because you used to have people that just somebody did the trade on the phone and then someone input it into a mainframe system. It was like, oh, all of a sudden the guy that does the trade can also enter the ticket. That's the evolution. So I guess I've always tried to stay ahead of that, because frankly, if you don't, you become blockbusters, right? So the goal is always that we are Netflix, not blockbusters. So when I looked at crypto, look, I'm not a crypto evangelist. In fact, we probably don't fit in it anywhere. In a way, the TradFi guys are going, hold on a minute, you're trying to disrupt the market that we know and love so much. And the crypto guys are saying, hey, you're part of the fabric that we're trying to break. But for me, it's just a natural evolution. So blockchain tech, I think we're very fortunate. For me, it's the third or fourth industrial revolution. It's the two that we've lived through. Right? We managed to live through the internet first and now blockchain. And I hope I've got enough life and career left in me to see the fruition of this the way we did with internet and electronic trading. But what's amazing is that not all trading is electronic today. You know, large parts of the FX market, like the swap market, are still traded on the telephone. Can you believe that? So there's sort of 40 to 50% of that is done on the telephone or through requests for quotes rather than live streams. So there's a long way for that to go. But I think at this revolution, the blockchain revolution is just at the very start. So the electronic one needs to finish, and then the blockchain one will take over. And for the bits that haven't become electronified yet, they might just skip it. It's a bit like skipping cable networks and going straight to Wi-Fi, that type of thing that happened in Africa. It might just be that for more latent, slower, less liquid assets, so say the corporate bond world, you might just move straight onto a blockchain framework. So I think it's just that natural evolution, and more importantly, back when we established LMAX Digital, my customers asked me to do it. And who were those customers? You know, it wasn't moms and pops. It was the largest proprietary trading firms in the world that said, look, we needed some institutional grade infrastructure where we can exchange risk with like-minded participants. I guess they asked other exchanges, but maybe we were the ones that were agile enough, crazy enough to do it first. So I just think, you know, to stay ahead in capital markets, you've got to be aware of the new thing. And guess what? If you look at the biggest banks of the world or the biggest institutions of the world, you mentioned some of the names that have applied for the ETFs today. You know, they're part of the status quo, but they're moving into this asset class now. So that's how they stay ahead. That's how they stay relevant. And for us to have long careers, we've got to stay relevant. So I think that's what encourages us always to try and keep up with the times.
Well, you've made some bold statements about Bitcoin, about the value of Bitcoin
and
where it's going. Want to get your take on kind of where do you see Bitcoin? What levels do you see it getting to, and what do you think the impact is going to be?
Well, the good news for you is I've never, ever been paid for making market predictions. So I match buyers and sellers rather than make trading calls. But look, I think Bitcoin itself is pretty easy to predict in that it's supply and demand, right? There's a limited supply of this. The total market cap of crypto is around $1 trillion today. Bitcoin's just over 50% of that. So it all depends how much of traditional assets or traditional portfolios are allocated to crypto to predict what the price is. So let's look at that. Let's step back for a minute. There are $200 trillion of assets under management and in custody today. So if 5% of those big names you've mentioned of the asset managers, 5% of their portfolios become allocated to crypto, you're talking about $10 trillion. That's 10x from now. I'm not predicting 10x, but maybe I am, depending what your time horizon is. If your time horizon is 10 years, I'd probably expect tokenized assets, digital assets, call it crypto assets if you like, to surpass that. I mean, my real belief is that most of what we trade will be tokenized and will reside the back offices of that will reside on digital ledgers and on blockchain technology. But if you want a shorter term analysis, I expect that all of us in this room, all of us watching, all the asset managers will allocate single-digit percentage points to crypto assets or tokenized assets. So supply and demand basis, I just think it's the same, it's that multiple you're going to see on the Bitcoin. So people say to me, isn't it crazy you think Bitcoin can trade through 100,000? I said, well, if that amount of portfolios are allocated to crypto, it's just an inevitability. That said, if there's no regulatory framework, if ETFs aren't approved, then I don't see why it moves beyond where it is today. And it could trade lower. So that's the classic researcher economist piece, which could go up, could go down. But I'm just saying the pure weight of money means that if those products are approved, then you could probably add a zero to the price of most crypto assets today.
Yeah, and I know you don't get paid to make predictions, but I'm going to keep asking you to make some more predictions.
I don't mind.
So let's talk about some other currencies. We've seen the BRICS expand at a growing number of non-dollar denominated deals. What's your view on US dollar and other major currencies?
I mean, look, the US dollar is a great whipping boy, but it's led currency reserves for 50 years now. So if I look at the net change in currency reserves over the last decade, its predominance has declined by 3%. Right, that's it. So euro and dollars were 85% of total foreign currency reserves in 2012. I think, and that was split down 61% US dollars, 24% euro. I think dollars dropped to 58% and euros to about 20%, 2022. So I guess that's a 7% shift in those two assets. So that's sizable, I guess, in a decade. But dollars are still at 58%. And you talk about BRICS currencies, well, renminbi, I think accounts for just shy of 2.5% now. So that's the headway it's made in that decade. I think we're a long way away from seeing dollars go below 50. And when it goes below 50, who knows what happens, right? There's no divine right for it to be the reserve currency of the world, but today it certainly is. It's quite surprising to me that we're still talking about BRICS, because I think one of those letters is kind of non-tradable right now, for sure. And look, I started my capital markets career in fixed income emerging markets, and it's kind of surprising to me that a lot of these emerging markets, emerging economies, emerging currencies are still emerging. You know, we're still trading the same NDFs in 2023 that I traded in 1996 and 1997. So it's a bit like, putting the two together again, it's a bit like Bitcoin's always up and coming, right? Some of these emerging currencies are always up and coming. When are they going to be up and gone, right?
Yeah.
Up and when? When are they going to become part of G10? So, look, I watched that. What I would say from an LMAX exchange perspective, I'll go back to not making predictions. What we're actually good at is matching buyers and sellers. So the more currencies there are, the more trading opportunities there are, the more volatility there are, the better it is for us. And look, if renminbi became the number one reserve currency, okay, we'll trade that as much as we trade dollars and euros today. So, but for what it's worth, I think the dollar concentration will remain at this for at least for the next decade.
We're heading into the fall, and FTX is coming back on our radar for various reasons. And so I want to get your take on the ripple effects of what we're going to be talking about in terms of the trial and SBF, and is that going to kind of impact where the sentiment on this space, on this industry? It's
disappointing that it's taken so long to play out, and it's disappointing that bad actors get more press inches than the good actors, right? That's just the fact. So, let's get it done. Let's really understand the facts, and let's this industry move on, because the industry's been damaged by more than one bad actor, and a lot of customers have suffered because of that. This is why we need to get good actors to lead the way to lead the standards. And the sooner we can put the yields of 2000 to 2022 behind us, the better. Short-term, look, I'm not going to deny it. There will be impacts. Of course, it's interesting for the press. It's interesting for the journalists. It's going to be covered a lot from October onwards, if it's not delayed. Certainly, you saw this week that Mr. Ray got approval to sell off those assets. So you're going to see some selling pressure into crypto. What I would say is that the asset holdings in crypto majors, so Bitcoin and Ethereum, aren't so great. They should have a major impact on the Bitcoin and Ethereum market, but there will be some because you know there's selling pressure there, and the old trader maybe will just be able to see those orders resting. But it's going to happen over time. So look, the sooner it's done, and more importantly, the sooner that we get their funds back into the hands of the customers who lost them or had them frozen, the better, and then we can all move on into a brighter future for crypto and all capital markets.
Okay, last prediction. Last couple minutes. Crypto bull run.
Yeah.
What features and characteristics need to be in place for something like that to happen again?
So, diversification of product. So not just a spot market, not just a retail perpetual swap market. So you need to have the whole gamut. You need to have spot derivatives, and including in derivatives, in the futures markets, options markets. You need to have an approved ETF. You then need to have a regulatory framework that provides that segregation of funds and separation of functions so that we all know who the intermediaries are. And then ultimately, look, you need the gatekeepers. The gatekeepers to capital. Who are those gatekeepers to capital? They're the banks. So you need the top 10 banks in the world to provide market access to all their customers. And what I mean by that is today there's limited access via our future, and the future that currently exists isn't fit for purpose. It's a 5-day product in a 7-day-a-week market. So it's those gatekeepers providing access to spot, futures, options, ETFs, and all other derivatives that are required for an efficient marketplace. And I think the regulatory framework will, the establishment of a regulatory framework will allow those gatekeepers to provide access to their customers.
Well, I want to thank you for this conversation. It was great speaking with you, and hope to see you again in DC or New York soon.
I've enjoyed it. Great to be here, and yeah, I look forward to catching up again in DC.
All right, thank you.